Let's talk about, though, a couple of areas where we are seeing a little bit more rockiness, and that has to do with buying cars. As we know, this is an area where prices were hot over the past year. We've seen a little bit of a hit to that, but those prices being hot is not universally a good thing. So we've got Carvana and we've got AutoNation both out with their numbers. Carvana shares are down by 6% here. There's a couple of things going on. On the one hand, revenue was up and beat estimates. It did post a wider than estimated loss here, and really the margin suffered here in part. I guess they're not able to pass on all of the increases in used car prices, but there's something else that I want to mention as well, Soz, and that's a big offering of shares, $1 billion offering of shares. So you get share dilution out there when this happens, even though the CEO and his dad have talked about that they are going to buy some of these shares. But nonetheless, that appears to be putting some pressure on the stock, too.
Absolutely. That, too, and Julie, I think it just boils down to Carvana. They just can't get enough cars to meet demand, like what you just mentioned here, just to meet that demand. And secondarily, they're having to pay more for cars that they do buy from consumers, also efficiencies in their operations as they, in many respects, are in fact still a startup. Of course, a startup with a big market cap that rose to fame during the pandemic. Nonetheless, still a company in its early stages. What I do want to mention here, though, Julie, they pushed out their outlook for profits. Now they originally saw operating profits in the last 3 quarters of this year. That's no longer the case. They pushed that out for a couple more quarters, just underscoring the challenging environment.